Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. Apologies for the lack of video yesterday. I was up, out and early and didn't have time to get it done in the morning. I know you guys probably think I'm like some sort of wild alcoholic party animal at the weekend, but I think this is about the second or third weekend now where I've basically not even had any alcohol, so that definitely isn't the case. Or actually, I tell a lie, I think I had like one drink on a Friday evening, but yeah, no getting drunk for me for weeks now. But yeah, sounds like a bit of a guilty conscience there. But you guys know that I do these videos practically every day without fail. And most of the occasions when I don't do them is because I am severely hungover or not at home. But yeah, not the case yesterday. Was just up and early, and that was that. So yes, that lifestyle disclaimer all been said, we shall go straight over to those Bitcoin 4-hour charts. Yeah, we'll actually flick over to the Bitcoin 4-hour chart, shall we? So as you can see, we did try our best. To hold on to this interim support area, but we did kind of say if we lost this horizontal here, then yeah, maybe we would temporarily get supported or get a bit of a bounce. But realistically, we've got a good chance of obviously coming down towards this $36,000 level. Obviously this candle has 16 minutes left, so it has got time to rally back up, but as it stands, it's going to be a 4-hour closure below this support area. In fact, we'll have to extend this along here, this support area, and at which case, yeah, maybe we'll get an acceleration down. Can we hold this low? Well, hopefully, but I mean, it's not really a significant level. The main level is pretty much this level. So if we get down to here, ideally we don't want to be taking out this low. We don't want to be closing even anywhere below here. Ideally, we don't even want a closure in this area. We can have a wick into it, that is fine, but we don't want a closure. And then yeah, we need to, with this, we've got to basically turn this around here. Otherwise it could be a pretty dire situation. There is a lot of FUD going on globally with all sorts of things. Even there's FUD in inverted commas price action in lots of assets, well, most notably food and energy prices. There is a lot of instability in financial markets, and obviously politically as well. So there is, yeah, I mean, all I will say is that everything is the second derivative, the rate of change. Can we see an increasing level of these bad situations going forwards, the bad news going forwards? Because if we don't, and then that rate of change starts to decelerate, then clearly the future, the obviously markets which price in the future will then start to price in more bullish, and this will be the low. It's always the low is when everything is most fearful, and then obviously that direction then changes, and always the high is when everyone is most greedy. Obviously once it starts turning from either high or low, that is the point that things change. But I mean, so is it a bit of a chicken or egg? But all I will say is we are at a lot of obviously negative sentiment and news around that. It is difficult to keep that accelerated amount of bad news to keep basically markets weaker from here. That is what I'll say. On that. And that is not to say that we can't suddenly get like a new very bad catalyst that then does drive us lower, but that obviously is a low probability event, and I think at this point we're starting to lean towards a high probability is that the bad news has to start to wane. But yeah, our S&P, our SP over here, as we can see, is still maintaining this lower level of support. Obviously back here testing it a few times before, so not the worst closure. Obviously the good closure would have been up here, the bad closure would have been under here, so the closure for the week was roughly a midpoint, so that is not too bad. Also, I mean, gold just as a purely as a indication of fear. Literally back up, closing extremely high at the level we spiked up to, slam back down and all the way back up there. So that is a particularly bullish looking chart. We have been saying that I think we're just going to have a high value relationship for gold now, unless well, I just think that's the word. There's not really too many unlesses really about that. I think basically the new floor, I would suspect the new floor for gold would be basically within this 1840 to 1880 area. I suspect that will be the new floor. Yeah, maybe we just trade sideways, bouncing up above 2000, get slammed down a few times, and then yeah, before making a move. But I mean, you have to look at the longer term chart for gold. And I mean, it's extremely bullish looking. So yes, we will just go back to the 4 hour here. Also 10 year, as we can see, easing off. I mean, in the face of obviously all the massively higher inflationary forces we're getting on with food and energy, which are practically all of inflation, aren't they? Let's face it. And then if we wanna then add a tech element, there's obviously going to be the risk. There's going to be the risk of China making some strategic moves that could massively impact the tech space, i.e. via semiconductors. So yes, I mean, we are basically factoring obviously fear, but I think we're factoring in a slower growth, and also the fact that yeah, I mean, basically the Fed's going to struggle to raise rates even in the face of what I'm going to show you is the ridiculous inflation. I mean, it's just closing all the way up here. Not good at all. I mean, I think that we said in an earlier video this week, I think one of the in inverted commas black swans are going to be maybe like $200-$250 oil, potentially in like a few weeks. I mean, I don't think calling $200 oil is that much of a crazy black swan, but I think if it happened over like the next few weeks, basically less than a month, I think that would be sufficiently classed as a black swan and would absolutely tank everything, apart from obviously oil stocks. They may do okay in the face of that. Look at the wheat. Look at the obviously another spike up in wheat prices. I think people are waking up to the fact that obviously just nearly 30% of wheat and on obviously other food stuffs come from Russia and the Ukraine as well. And the main thing I think they're coming to terms of is that this conflict can maybe last longer than what people potentially expected, including the man Putin himself. At which point the crop sowing season will basically get missed, and then basically no crops next year. No crops, not just the crops stuck in boats in the not being able to move because of insurance reasons, but yeah, just because, well, just because obviously they've not been planted there to get moved. Ethereum Satoshi pairing trying to make a bit of a move here, trying to make a move into this horizontal, into the resistance area. I mean, I would love to be hopeful on it. Maybe that my negativity, loving to be hopeful, it is an indication of the peak potential peak fear we're at. Everyone's negative, so realistically we can only turn up. We shall have to see. Obviously we've got DeFi specifically struggling a bit, obviously after some of the top devs are deciding they want to rug FTM basically. Bitcoin dominance easing off a little bit, as we can see here, and the actual ETH USD pairing is struggling back down at some levels. As you can see, we could probably draw a little zone in here. In fact we will, because we're at it now, so we've basically, oh, not that one, we're at it now, so we've got to practically hold this level now. Like I said, if we do break, no, I don't like I said, but if we do basically get much lower price action wise for BTC, we are going to start to look bad. I mean, I'm talking like a few $1,000s below $36,000, a couple of $1,000s lower, which it obviously isn't much. Bitcoin can start to look very well, just very precariously positioned So yeah, I've got to keep an eye on that. What else do you want to look at on here? We'll have, yeah, DXY absolutely pain trade here for basically the world is short dollars. Basically the world transacts in dollars, the world needs dollars. So if you need dollars and the dollar's going up, if you need dollars, in fact you are basically short dollars, because you need them. If you didn't need dollars, then you will be long dollars, but you're short dollars, so the dollar squeezing is not good for basically the world. The world, and is clearly another sign of risk off. Another sign of risk off, and it's just basically another sign of things are looking bad. And this is a particularly aggressive move up now. Maybe this is going to be roughly the top, and we are going to see a period of easing off. Maybe, just maybe, because obviously, as we know, conflicts can be highly unpredictable, to say the least. So yeah, I mean, we don't realistically know how it plays out, but we do know that charts like this don't continue like this indefinitely. Trees don't go to the sky, is as the saying is. What else? Yeah, the ruble on its rear end, even lower. So yeah, not ideal. Obviously, this is a lot of what's feeding into the dollar. I mean, yes. Russia, like, regardless of what this currency is doing aside, isn't in the weakest position as what the rest of the world be when we hit $200 oil, and obviously like maybe even a 3x in gas prices and a 4x in wheat prices, food stuff prices. Russia is all of a sudden going to be better positioned. The relative strength of Russia compared to Europe and America and the US, when if that happens, basically energy prices and food prices considerably higher, gold prices considerably higher, is gonna basically put them in a relatively a lot stronger position. So that is something to be aware of. Not that we're a massive Russia shill here, but it's just the realism of the situation. You'll probably notice it's not like I don't have the same enthusiasm for China. It's not like I'm an anti-US trying to shill the people that are against US. I don't have the same optimism for China. They are basically a massive commodity importer, and literally it's like, at the end of the day, this is this simple. When the fiat system is going to struggle, and you still need real things to do things, whoever has those real things clearly has the real things, has the real assets. So Russia has them in abundance, and that just puts it in a strong position, and it is that simple. China doesn't particularly so. I mean, it does, but not to the extent of its population and its demand. So yes, what a negative video realistically for Sunday. However, it is not that negative. Like I said, maybe we are at peak negativity, peak fear. Maybe we can start to be moving up the sine curve in the opposite direction to this downward trajectory that we've been on. And then yeah, hopefully things can look better into next week, and things to potentially calm down geopolitically. But literally that's a toss your coin prediction. But yeah, literally back to BTC. We close below here. We can have some wicks down into this, but we've got to hold this level. If we don't, we're going to start to destroy structure, and we're going to start to look pretty bad. Basically back over these levels. Yeah, basically over these levels, we'll start to look good again. I mean, we've obviously got these highs around 45,000. That we could probably move this area a bit lower now, down to about here. I'm not going to mess the chart up, but yeah, if we do basically close above this 45,000, we'll call it. Make a decision, Dan, above 45,000, and then yeah, we can potentially see a nice acceleration to the upside. But yeah, that is it, guys. Remember, this is not financial advice. I am not a financial advisor. Always do your own research, and I shall speak to you guys soon.